Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. It's generally related to three different topics: wealth building, commodities, and/or financial topics. Let's dive right in. Take a look, see what is going on today. If you want to follow me at Fair Square Finance, and if you want to join our community, finding-value.com, I dive deeper into all these topics and sectors, looking for investment opportunities and sharing that with everyone in the community. Special is a coupon code that we have that's active that can save money on the monthly and yearly memberships. So definitely sign up using that coupon code special if you'd like some savings. Bravos Research says alert, M2 money supply is now expanding at 4.4% after reaching its deepest contraction in 65 years. This is quite constructive for the stock market. M2 money supply is now expanding 4.4%. Remember, this is a percentage. So we came down and it was contracting for a little bit, and now we're coming back up, increasing when you get above zero. Starting to increase that. Now it takes a little bit of time for some of this to work its way through the system. Keep in mind that we also had the reverse repo that was leaking money into the system. So that negative print here, we didn't have the reverse repo back here, I don't think. So um, it was still leaking money into the system. Unusual Whale says withdrawals from home equity lines of credit or HELOCs during the first 3 months of 2025 reached their highest first quarter level in 17 years, according to ICE Mortgage Technology. That's crazy. Is that true? So withdrawals from home equity lines of credit, HELOCs. So it must be contained to HELOCs, and it was the highest first quarter level in 17 years. That's a long time. That's going back. That's going back there. Warning, the greatest stock market crash in history is coming this summer, warns Rich Dad Poor Dad author Robert Kiyosaki. Really, he's thinking that we're going to get the greatest stock market crash in history. I wonder where he's getting this from. Do not say I didn't warn you. Uh, as predicted in my book Rich Dad's Prophecy in 2013, the biggest crash in history is coming. I'm afraid that crash time is now and through this summer. Fortunately, millions, especially my generation of boomers, will be wiped out when the stock and bond markets crash. And then we've got some wisdom coming. Robert has called the last 9 market crashes, has been right 0 times. I would probably agree with that. I don't know if you know this, but you guys know Harry Dent. Harry Dent is another one that calls market crashes constantly. I think he came out of the womb, and his first words that he ever spoke when he was a baby was crash. Because that guy's been saying crash, 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 crash every single year since 2008. He's been calling a crash every year. I think Peter Schiff, on the other hand, he's been calling for $5,000 gold ever since 2009 or whatever it is. So a lot of these guys, I'm not saying that they're perma bears or perma bulls, but I don't know what they're looking at. And I don't know how they're coming to the conclusions that they are. The crashes, when you think of a big crash, I think of real estate imploding and bank loans going bust. That's kind of what comes to my head first. The Great Depression was from bank loans going bad. So was 2008. And those were the two most recent worst crashes since the Federal Reserve has been created, I would say. So, what is he seeing? Is it going to be a housing market crash where we get a bunch of foreclosures, but yet foreclosures are really low and people have a buttload of equity in their house? I just don't see it. They haven't been irresponsibly giving out loans like no income, no job loans, the ninja loans. I don't know. I don't know where he's rooting this in. Is he saying that our debt is so bad that we're going to get like a hyperinflation problem? That going to be the greatest stock market crash? Is he saying that because we have so much debt in the system that it's going to spike interest rates and the stock market will crash because of the spike in interest rates. Now that could be believable. That could be believable. So that might be where it's rooted in. Comments on my last couple of YouTube videos are scary. There are so many young men who cannot fathom a world in which the price of Bitcoin goes down and altcoins do not deliver life-changing returns. I keep saying it, but it's a harsh lesson, harsh lessons ahead. A lot of people just think that Bitcoin's going to go up nonstop. There's a lot of people that think that. What if it doesn't? What if it trades like the Nasdaq and the Nasdaq goes down quite a bit? What if Bitcoin goes down 99% and goes bust, completely goes out of the system? It was just an extension of the bubble that we're in today of technology stocks and valuations. What if all of this money is going to rotate rather from things that people want to things that people need? Maybe it hyperinflates and maybe Bitcoin goes up with everything else. I mean, that's another possibility. I don't know what the future holds. I can't tell you what exactly, if we're going to get into some hyperinflation and interest rates spike and how Bitcoin will even behave under those conditions. But I will say a lot of people think that Bitcoin's just going to keep going up, up, and up, and up, and up. And that's generally when you want to be out of an asset. That's all. The US dollar is worth 9% less than it was at the beginning of the year. That's crazy. 9% decline in the DXY. That's a relative strength indicator, given the beginning of this year. 6 months, 9% decline against other currency systems. Oil is up 1% to 63.15 for WTI this morning. Why do you think it's up this morning? I don't know why. I stopped looking for the whys. I don't really care why something goes up and down in the short term. What I try to do is figure out what are the pressures being applied to people in the system over the longer term. So, daily market movements, nobody knows why. The news attributes all sorts of crap. It's all garbage, guys. Like, they'll tell you why something goes up. They're just guessing. They don't actually know why, unless it's like some event like Powell speaks and the whole market shifts one way or the other. But most of the time, if it's just a normal day, most people don't know. They don't know the actual reason. They don't know the why. The better you become, the less you ask of why, because you'll never know the exact answer for short-term market movements. Nostra says they will hyperinflate the debt away. Treasury Secretary Scott Bessent says the country will never default on its debt. Yeah, they'll just hyperinflate it away. Agreed. And that's money coming into the system. That is the M2 money supply going up, just what we saw in the first one. What else are they going to do? They're going to let it go bank, are we going to let ourselves go bankrupt? No, they're just going to keep printing money. Print, print, print. Northstar says if the US dollar index falls through the green circle, it will have massive implications across all markets. That's at support here, ready to potentially break to the downside. And if we see this break to the downside for the dollar, you're going to see commodities explode, precious metals explode. You're going to see emerging markets go up if the dollar goes down against other currencies like Brazilian real, Australian dollar. That is the commodity bull market. So if you look at history here, the last big commodity bull markets, you can see where the dollar declined in some of these big areas here. So we saw a big decline. This is the 80s here. Big decline from 2001 onward, which ended in 2008 and then a double bottom into 2011. Now we are about to break down again, which is, again, the beginning of a commodity bull market, I think, a big one, if this were to break out. And we'll watch that together. Grady says, been saying that SIL and SIL-J will follow GDX up to all-time highs. Posted on SIL breaking out 2 months ago. Still, with a chart like this and all the other charts I've posted, many still do not believe. This is typical in how it always is. Most cannot change their mindset, and when market changes character. So here we bought at he bought at this corner here right on support, and then they added to it, and here it is breaking out, moving on up for SIL. I think a lot of stuff looks really good in silver mining companies, and I think that's probably one of the areas that could have one of the largest moves in the market still. But yeah, I agree with Grady. This is so physically, this is the tightest structural oil bear market I've ever seen. So he's talking about how tight inventory levels are physically. And then we've had a decline in oil prices. So we're in an oil bear market with the tightest physical market ever. It's kind of weird how this has transpired. Said yesterday, and this is Grady, says silver could break to the upside any day now. And it did just that a few hours later. Been saying that after the pink breakout, that this chart below is now ready for the big move up to the right side of the orange rounded bottom. And I think that move has now started. One has to understand that this move is very different from previous moves. The chart is now finally ready. This is the difference. Price cannot move until the chart is ready, and it is ready now. It's ready to go. So that's silver, the physical silver. And then I think we'll see silver miners take off with it. It's ready to go. Public, watch what they OPEC does, not what they say. So looking at May crude exports, Saudis remain disciplined, which should tell you everything you need to know about what they are trying to accomplish. Here's another one from Katusa Research. He says silver's biggest breakouts often start here, each time at a 100-to-1 ratio of gold to silver. In the last 25 years, silver outperforms gold by up to 5x. The trigger happened weeks ago, and now silver's on the move. Yeah, I agree. You buy when this is cheap. Well, what I do is I buy as much silver or platinum or whatever when things are cheap. And then I just hold on and wait until they become expensive. Silver's been cheap for a while, though. In 2020, it went over 100. This is the paper futures market. I was not able to successfully buy a whole bunch down here at the futures price. I tried to. I went into coin dealer shops online. They just raised the premiums up all over the place. So it never actually physically got to this ratio. That was only the paper ratio. It never physically got there. So I did a little bit different. I went into platinum versus silver uh, for some of my holdings because platinum did go down with the paper's futures pricing and silver did not. There was a disconnect. But we're at 100-to-1 right now. It's good to go. We're going to probably squeeze this back down. It looks fantastic. Freight futures AM update. Dry bulk is down 1%, Capesize, and flat for Panamax. Tankers down 3% for VLCC, and Suezmax is flat. Here's Michael Oliver giving some information. So gold, silver, and miners are in a bull market. That should be pretty obvious to everyone now. But that's exactly why MSA does not join in with all the other analysts and experts calling for corrections all the time. Bull markets routinely have 5 to 10% corrections. Most of the time, bull markets correct in time rather than in price. For example, they consolidate. Sometimes you get 20% corrections, but rarely. Extremely rarely, you'll get a 30% corrections like 2008. Unless you're day trading or doing very short-term swing trading, 5 to 10% corrections probably shouldn't even concern you. A 20% correction is a bit more painful, but unless the long-term trends are broken, it's still a buying opportunity. Same with any correction. Gold already had one of those in 2022, which we called a bear trap or false breakdown of all too obvious price chart lows, a clean and reverse. So that's Michael Oliver's opinion on pullbacks in some of these gold and silver markets that people are saying, oh, don't worry, we'll wait for a pullback to purchase. You may not get a huge pullback. So again, I'm in the camp. If I see a big bullish chart, guys, I hold on. I'm not going to get kicked off the bull. Um, one of the largest things that I've learned in my investing time frame is to not try to time the short term. It's very difficult, and most of the time, a lot of people get it wrong. So I'm writing the big picture, big trend waves, and that's basically what he's saying. Buy the dips, hold the rips in a big bull market, and that's exactly what I'm doing. Natural gas is just beginning. The current short squeeze that we are seeing today is just a tease for what's to come later. And I think that's what I said last time. So we're going to end it there. Give me a thumb up for the content, subscribe to the channel, specialist coupon code, and that's all I've got. And you should see a midweek update updated on the website. So if you want to go on and check to see what I like in the markets, definitely log on. It's up there. It's a midweek update. That's what I label it. That's all I've got for today. We'll see you next time. This is Finding Value.